right. Well, welcome to the Crushing It with Kitchen Remodeling podcast. This is the podcast where we help kitchen, bathroom, and remodeling businesses grow their companies with smart strategies and innovative tools. And today's episode, we are all about unlocking new opportunities with renovation loans. Now, we're joined by Peter, a mortgage broker who specializes in helping homeowners finance their dream remodels, but also really working with those remodeling companies, helping their clients so that they can actually achieve that remodel. And he's here to share how contractors can leverage renovation loans, they can attract more clients, they can close bigger deals, and they can boost their bottom line. So if you're ready to learn all about how to make financing work for your business, stick around. This episode is one that you don't want to miss, and we're going to do it all just after this.
Are you looking for some fresh ideas to jumpstart your kitchen remodeling business? Welcome to the Crushing It with Kitchen Remodeling podcast. Your host, Michael Goldstein, founder of Kitchen Remodeling SEO, the digital marketing agency working exclusively with kitchen remodeling contractors. And also, the author of the ultimate internet marketing guide for kitchen remodeling contractors, will provide insights on proven tips and strategies from top experts in this space so that you can take advantage of industry best practices. Your host, Michael Goldstein. Join Mike as he shares his knowledge each week with an insightful interview or educational segment about how to turn your online marketing efforts into more kitchen remodeling leads and sales opportunities than ever before.
All right. Well, Peter, I want to thank you for coming on to the podcast today. But for those who don't know who you are, tell us, who the heck are you and what is it that you do?
Perfect. I'm honored to be here. Thank you so much, Mike, for having me. Renovation lending is one of my passions. I'm Pete Ferrara with Neighborhood Loans. We are a mortgage banking firm. We are a national mortgage banking firm. We are currently licensed in 46 states. So we pretty much cover the entire country. We do specialize in renovation lending. I've been doing this 30 years, about 20 of it has been focused on renovation lending. So I'm excited to share, how contractors can take advantage of this. And like you said, boost your business.
That's fantastic. So tell me, Peter, just a little bit in terms of like why you think renovation loans are such a valuable tool for both homeowners and for the remodelers who are doing the work for those homeowners.
Yeah. So we run into a lot of first-time homeowners and move-up home buyers. And unless we have a philosophy, unless you buy a brand newly constructed home, we truly believe that someone walking into that home, they're going to find something that they don't like about the house. And what happens is it's going to take them forever to remodel it. They don't like the kitchen. They don't like the bathrooms. They need more space. And that project is just going to go on for years and years and years, and they're going to accumulate credit card debt. So we truly believe that the renovation loan can help homeowners put all that renovation into one loan and get everything done at the same time, within 4 to 6 months, let's say, on a big project. For contractors, what I hear out on the street is this. A contractor will come out and meet a client, and that client wants to do, let's say, a kitchen. And then they're looking around and said, well, we'd really like to do flooring. And that project grows. And I'm sure this is nothing new. Well, while you're here, how much would it be to redo the bath and this second half bath? What ends up happening is this. They have that vision. And then you and I know costs are up, materials are up. So when the contractor puts together that full bid, I believe the homeowner sometimes is disappointed that, wow, this is going to cost X dollars, right? And I was only budgeting for Y. Well, and they don't have all that money. So you can only make two choices, reduce the what work is going to be done, or try to figure out how to get that additional money. Well, we believe we have a good solution. If somebody wants a big project, we can finance it all. So the sky's the limit. We think that the homeowner will be grateful to have all that work done instead of just some of it done. So that's how we think a contractor can leverage this.
Well, that makes a lot of sense. We were talking the other day, and one of the things that you had mentioned to me, though, I thought was really interesting was sometimes, contractors are dealing with homeowners. Sometimes they're dealing with prospective homeowners, though. They're dealing with people who are buying a house, and maybe instead of buying that house for $800,000 that's got all the finishes that somebody else loved, you can get a house maybe for $400,000 and put 250, 300 of your own into it and get actually what you want. I think there's a lot of ways that, people, that contractors don't even think about, geez, if we're only targeting homeowners, we could be targeting a much larger audience. But with that said, I know that there are certain types of loans that work for certain people. Like, can you break down kind of like the type of renovation loans that are out there and what's actually available for people?
Yeah, certainly. So I love that concept. There are tons of folks out there looking at new properties and they would like to put their own finishes on it. So I think it's a great way to do that and leverage the renovation loan products. Right now, we are using the FHA 203K loan and the Fannie Mae Homestyle. We do have a VA renovation loan. I'll touch on that in a minute. So the difference between the two is not a whole lot. It's mainly in the dollar limits that you can use on FHA versus conventional. Conventional will allow over $800,000 in a purchase plus renovation, which gets you in that higher price point on a single family home, all the way up to $1.5 million on a 4-unit, which is another thing we can do with this all the way up to 4-unit properties. The FHA loan is really built for a homeowner or home buyer to go up to about 500,000, depending what market you're in. So lower loan amounts, a little more lenient on credit parameters and qualifying parameters. They basically both work the same. Anything you can imagine that you want done to the property, we can fit those improvements in there. So they're both equally great programs.
And does it matter how much equity you have in the home or how much equity you may have when you buy the home with any of these loans?
Yeah, I love that's a great question because it comes up all the time. Well, like how am I going to buy this home for 300,000 and put 150,000 into it? The property isn't worth 450,000. Well, here's the secret. We don't do an as-is appraisal. We're looking at that future after repaired value. That's how we do the appraisal with the scope of work. So we believe the more work you do, the higher that value is going to be, and all that extra equity stays with that homeowner. So that's the secret to the loan, is incorporating all those renovations into the after repaired value.
So that makes a lot of sense. So I guess you kind of have to take a future looking approach, or at least the appraisers do when they come up with that. And with that said, our podcast here is really geared not to the homeowner, but to the person who's doing the work for them. So are there any specific eligibility requirements that the remodeler should know about to guide homeowners?
Yeah. Yeah. So, well, I want to talk, in terms of, let's say, contractor qualifications. There's a ton of misconception out there. Like, these programs are so restricted with contractors, like they have to be on this secret approved list. None of that is true. It's as long as that contractor is what we would consider a qualified contractor, where if licensing applies, and every state municipality is different, some require licensing, some don't. If they do, they have to provide their contractor license. The other big key is they do have to have liability insurance. We have a renovation concierge team that collects all that information. And then last, they have to be, I guess, a qualified contractor that can put together a quality bid that breaks down the bid into labor and material. That is kind of specific to these renovation loan programs. We help the contractors if they're not super tech savvy. We do have our team that can give them templates to help them through that. So the process isn't all that tough. We help them through the process. So that's really it for the contractor qualifications, I would say.
All right. And then, one of the things I think the contractors need to look at is, how can they benefit from working with clients who use these renovation loans versus just working with clients who are paying out of pocket. And I think the big question that gets asked a lot, I know in our marketing agency, we write about this all the time, is how much value does a new kitchen add? How much value does a bathroom add? But, with respect to kind of the things that you're seeing is what's really the potential ROI for homeowners who invest in renovations using these types of loans?
Yeah, I mean, and you hit it on the head. We always talk about, what are the value add items to do? Obviously, the big ones, we're talking about kitchen remodeling here, right? Kitchens, bathrooms, full cosmetic renovations are great. The ones that don't really add value are things like what I would call essentials, like heating and air conditioning, roofing, siding. I mean, every house has that. So to
Sure.
put a new one, there's really no value add there. The biggest one that I love, and I think there's a huge market out there that's potentially untapped. And obviously the country geographically is all different. We in the Chicagoland area have tons of ranch homes, right? And they're single level, and the space is limited. Well, with this program, you can do a roof tear off, build a second story. I truly think that that's an untapped market. What ends up happening is most of these folks say, well, the family's grown, right? We got to move. That isn't true with this program. So there's a huge opportunity there. You go in and say, there's a remodel. Well, we can get you more space. You love your neighborhood. Great. Stay there.
That kind of reminds me of I have a couple clients in both Texas and California, and one of the things they're really big on right now is promoting AUDs, accessory dwelling units, which basically you've outgrown it or more to the point maybe you've got an in-law who wants to move in and my gosh I don't have space in the house, but if we could add on something. And that, I mean, these loans sound like the perfect opportunity for that, especially for people who maybe, depending on the market, they may not have the equity to pull it, to pull a home equity line out and they don't have the cash, but now maybe there's that opportunity to expand.
I'm so
Um,
glad you mentioned that. Yesterday, this same scenario that you're talking about just came up. So a nice woman in Sacramento, California, they had purchased a home just 6 or 7 months ago. And unfortunately, now she has a brother that has become disabled. Well, she was panicked, for a solution, and she was looking into it. She said, Pete, I searched the internet high and low. And I said, well, you found the right person. I said, we have a solution for you. She said, can I build I heard I can build this accessory dwelling unit. I said, you sure can. And her brother has limited income, but with that limited income, they figure they can put 1,000 square foot a new building in her backyard and have her brother live there. So he's close enough. He can be taken care of. So I love what you're talking about. ADUs are the hottest thing out there. The only thing I would say is depending on geographically the market, some municipalities are tougher on ADUs than others. Try dealing with Chicago building permits and stuff. But California is very, very friendly,
okay.
and
Yeah.
probably Texas as
California, you
well.
don't even need a permit from what I understand. It's
But I
just
love,
throw it
I
up
love
there, bring the family.
I love the concept. I mean, listen, Mike, it's a way to solve some family problems instead of, hey, I have to sell the house and find something that can help my brother or my parents or whoever it is. That it's a real solution, and more contractors should look at the ADU solution for family. It's a giant market.
Oh, for sure. And so I know you've been doing this for a while, Pete, and you've worked with a lot of different businesses and different homeowners. Can you share an example with us that maybe where a contractor, a remodeler, a custom builder, someone like that has been able to successfully leverage these renovation financing to expand their business, or maybe even to close a bigger deal than what they started out with?
Yeah, for sure. And the perfect example, I had a client that had an elderly parent, and they kind of wanted their own space, and there was limited space. So the contractor who, does beautiful work, unfortunately this project was going to be 260,000. And so they came to me and said, well, the client would like more space. And this is where we did that roof tear off. And we were able to borrow all those dollars, every single penny of it, because they already had some equity into the home, and that after repaired value wasn't going to be an issue. So great success story. Instead of trying to use the existing space and chop that up and make 2 living spaces out of a small space, they were able to get a great 2-story space. That's one example of a contractor that was able to figure out a great solution for their client, who was super, super thrilled about that.
And that's I love hearing that, and where you can come up with a win-win. So now the homeowner gets what they want. The contractor's going to make a little bit more money, going to have a better project, going to have kind of a premium profile that they can show off.
Yeah.
Let's talk for a minute though, just kind of shift in here to looking at, well, what are some actionable things that contractors can really do, that remodelers can do to attract more clients through digital marketing with financing offers? Because I know that that's actually a big thing that a lot of people, they get worried about. Well, we don't offer financing. We don't have the ability to, and they obviously need to get connected with somebody like you or somebody in their market that can help them do that. But how can remodelers really incorporate these renovation loans into their promotions? Like, are there any limitations on that? Like, are they allowed just to run Facebook ads, to run Google ads, so that they can attract these people, or does it have to be something where they're calling out, hey, we work with XYZ financing company?
Yeah, I mean, I think there's kind of a little question in terms of what you can and can't put in ads, that are, for consumers, is it deceptive or not, and quoting
Sure.
interest rates and stuff. But I think what I like is if contractors promote, would you like, a new kitchen, bathrooms, flooring, and it be sort of a payment amount. That's a good way to attract people. Because if somebody says, well, I'm good with $500 a month, well, what does that translate to? You can get a whole bunch of work done instead of trying to advertise on a pure price point. I think that's possibly a losing solution. Well, somebody else said, hey, Mike said he's going to do this job for $65,000. Well, Pete really needs to work. He's doing it for $55,000. And I think it's, if you show them the value, and now with, I don't know if contractors are playing around with the AI stuff, what it can look like, right? That's the latest and greatest. What we do is, if in an area, I think someone should put out there, does your kitchen look like this, right, Mike? And I have plenty of, would you like it to look like this? I think that attracts me. It's that type of approach that I think will help the contractors, as well as almost everyone. I would say 99% of the folks out there don't know that they can add space to their home. That's a killer one to get after right away, if that contractor is doing the additions and stuff. Untapped market.
For sure. And another area I think that contractors can really look at in terms of how to promote the ability to finance is something that both you and I do, with our respective companies, and that's, running webinars, putting out educational content to capture and nurture those leads, and just to kind of get interest. Do you have any tips on really using webinars to attract homeowners? Because I know you certainly do that from the mortgage side, but how, what maybe a contractor might do with those webinars?
Yeah, I mean, and I love that approach. We've taken our entire business and taken all the different products we offer, and we've created webinars now. Come learn about being a first-time home buyer, grant programs, and specifically here we're talking about renovation. So I think if a contractor has the ability, or they have a big database, they can, if they don't want to run their own webinar series, if I assume you've done this before, there's a lot of work in the background to doing a webinar and having a set. We are good with contractors sending folks to our webinar and educating them, and then giving them back to the contractor. But the webinar approach, I think, is non-threatening. You can get a whole bunch of people to register. So we do them, and we get 50 to 90 people at a time to register. And that's just a warm call. Then I would, even if they don't join the webinar, right? What do you have? They have their name, phone number, email. Hey, this is Mike calling you up. I saw that you had an interest here. Now it's a great warm call. Just want you to understand, understand what you're looking to do. We also, like you do, we record that and we send them a recording of it. But there is a little bit of work to put together the webinars, but I would be glad to share if there's a way to give a unique link to these contracts. They'll know who they're sending to it, and it's their client to follow up. So we're a huge fan of the webinars.
No, I think that makes a lot of sense. And now contractors, they do the marketing, they get somebody interested in financing. Let's talk a little bit about some of the concerns though that remodelers might have about working with clients who do need financing, because that's one of the things that I get told a lot. Anytime we're talking about running an ad and we say, hey, let's run an ad for $2,500 off your full remodel, or something that might attract someone who's more budget conscious, and immediately kind of red flags go up. So with that in mind, how do you think that contractors can manage potential issues within finance projects, like project scope changes? Do those come into play? Does the bank look and say, "Oh, wait a minute, you changed this. No, you can't do that"? Do you have to get the finance company involved with that? How does that all work?
Yeah. So the way we do our typical loan, we have what's called a contingency reserve added on to the loan itself. And typically that's going to be for, we'll say 15% of that project. So the nice thing about it is we know that if you're doing this project of a sizable scope, there's going to be stuff that will change or unforeseen things. That additional monies will be there, and it's simple change orders to access those additional funds. The other nice thing about our loan is that if you're redoing a full kitchen, bath, flooring, we have fixtures involved. The client doesn't have all that stuff picked out right now, right? So the contractor can simply bid with an allowance. So they'll have an allowance in there. It's $5 a square foot for luxury vinyl plank. And the client changes their mind. That's a simple change order. You can access those additional dollars to do that. So we do have a nice buffer for that contractor, so that they don't have to go back to the client. Hey, look, I need another $3,000 in here. That's covered in that contingency reserve as a simple change order.
And just to kind of take that a step further, like if you're involved in a project, and you think you touched on this earlier, hey, I'm having my kitchen remodeled, and we may be ripping it all down to the studs, but that's what the plan was. And all of a sudden, you hear, I got this bathroom over here, and I just keep staring at the shower. I want to replace this. I want to put a brand new tub in there. How does that work when can you go and is it like a refinance? Like how do you handle it when somebody wants to add on to the project?
Yeah. So we like to be as tight up front on the entire scope, because that affects value, right? That's what we're using for the appraised value. Now, what you can do in the end, if there's towards the end of the project, there's money still left over in the contingency reserve, you could start to add some minor additional items. You really can't, if it's going to be a large item, it's hard to go back, and you won't be able to refinance in the middle of it. That's why we really like the client, the contractor's client, to give them your dream list, right? This is everything we want. Lay out the cost and then work that out in the beginning, because that'll be real smooth. Then they know what their expectations are, and like, well, I should have put the bath in here. Let's get it all up front and know what that is. We've had clients change orders. Big change orders will be like, we want different flooring, or we didn't have flooring here. We have extra $5,000. Let's just do that. That's not a problem. But changing significant scope items, that is very difficult in this product.
Well, that's fantastic. And Peter, you're just dropping so many just great gold nuggets of knowledge here on us. And I'm sure everybody listening to this is, they really appreciate that. As we start to wrap up here, one thing I'd love to find out, or I know, but want my listeners to know, is if they want to get more information about financing, about working with a lender who can help them offer this financing, what do they do? How do they, if they want to talk to you, how do they get a hold of you? What's the next step?
Yeah, so obviously you have my information that we can drop in there, but I'm old school with the phone call or text. So my number is 708-774-1654. That is my direct cell phone. We like to, then get connected with the client direct for that amount, what they're looking to finance, and make sure that we have them, we can get them fully approved for the dollars so that the contractor doesn't have any issues like, well, they're in the process of it. Are they going to have the money? Are they not going to have the money? And that's, I guess, one thing I do want to expand on. When we get them fully approved for this loan, we've gone through the appraisal, we're ready to close. Those total dollar amounts are secure. The borrower doesn't have those dollars. They're sitting in escrow, right? So there's no chance that they won't get paid because those dollars are there. So that's another great thing for the contract. A client might have the cash money,
Mm.
and then something like, well, hey, sorry, I'm looking to
Yep.
renegotiate the deal.
It's kind of like when I think about when you take payment via credit card versus ACH. Yeah, I took a credit card, maybe you're going to get paid, but they can dispute that, and
Right,
you might lose that right away. A little harder with ACH. Same
right,
thing here. Funds are not held by the contractor. Funds aren't being held by the homeowner. They're in escrow, and there's a third party who's going to say, nope, job is done. The inspection goes well. Here's your money. Um,
right.
that's really great. And in terms of the contractors themselves, though, so if they don't have a finance company to work with, how would they get? Would they just give you a call and you set up a program with them? How does that all work?
Yeah, they can call me direct again. I think the best thing for a contractor that's interested in learning more is to have, a more in-depth one-on-one conversation about, what's their business look like, what's their project scope look like, so I can kind of, guide them through,
Yeah.
what types of loans fit in with their particular business. In some instances, if a project I would say is on the lower end, like we'll say a $10,000 or $15,000 project, that's probably not one that merits the renovation loan. They can find that other short-term or interim financing or revolving or installment type loan financing. But we're really built for that contractor to get those bigger jobs and finance that whole thing.
No, that makes a lot of sense. And the other part of it is I think a lot of contractors, they don't really know if they can offer financing. They don't know what merits a loan and what doesn't. So having someone like yourself, and I think the best thing for them is if there was some sort of educational resource out there, some sort of webinar, about lending and renovation services. And I think, don't you guys actually have one?
We do. We do. We have a few tools. We have several educational pieces for borrowers and for contractors too. I have a partnership that we can leverage that has all kinds of specific contractor video training that we would be glad to share with the entire group. Whoever's interested, it's not a problem. We can offer that out there.
Well, that'd be great. And just for everyone listening, everyone on YouTube watching this, check out the comments below. It's right in the description there. For those of you who are listening to this podcast on Spotify, on iTunes, whatnot, check the show notes out. The link is right in there. So with all that said, Peter, I just really want to thank you for coming on today. This has just been fantastic. I've learned so much myself. I'm sure my listeners have. We absolutely, we got to have you come back in for round two for sure.
I love it. I love it. You and I talked about earlier about it. We have a cool little tool that next time we could share with contractors. I'm sure will definitely help them become more efficient.
Sounds great. Well, Peter, again, thank you so much. For those of you who are listening, this is Mike Goldstein. This was the Crushing It with Kitchen Remodeling podcast. Thanks for tuning in and look forward to seeing you again next week.